Welcome to the Banker's monthly preview, taking a peek into what's in the March issue. I'm Joy Macknight, Deputy Editor of The Banker. This month, The Banker launched its first top GCC Islamic bank rankings, so make sure you get a copy to see which bank comes out on top. The cover story is about the new science of risk management, and I have Silvia Pavoni, Economics Editor and author of the feature, in the studio with me to explain the new techniques emerging in risk modelling. Silvia, thanks so much for joining me.
Hi, Joy.
So can you tell me some of the perceived problems with the traditional risk modelling?
So far, the main challenges facing risk managers, but also supervisors, central banks, banking supervisors looking at how to prevent another massive financial crisis from erupting, is the fact that what we have so far is backward-looking. So even stress testing exercises struggle with really being able to anticipate what might come, and also to look at the system as a whole. So we look at individual banks and what potential shocks, might do to those institutions. But it's very hard to determine the connections and linkages between that individual bank and its counterparties, the regulators, its clients, and how those might affect the stability of the system.
Okay, and how can financial services learn from the natural sciences in terms of new risk models?
So there is a new wave of interest in how to link social sciences and natural sciences. And so techniques that have been used, for example, in physics to understand the process by which proteins fold into a stable structure might also be applied to risk management and more broadly even to the economy. So how a different set of agents, all part of a system, interact with each other and therefore keep the system in equilibrium or potentially and accidentally tilt it off it. So this is called agent-based modeling, for example. It's still, in a sense, a pioneering technique, but the US Treasury, for example, is using it. The Bank of England here in London is also looking at it. And a number of banks are trying to understand how that can complement their existing risk management techniques and how it can help in, again, analyzing and stimulating what might happen in the future to prevent future crisis.
Okay, is there any other sort of new risk models that are coming out, or can you dive in a bit deeper in terms of the agent-based model?
So agent-based models, essentially, again, it's a simulation. It looks at the various interactions between a bank, its counterparties, all the banks in a system, regulators, clients, customers, and so again, how all those interactions might keep the system in place. And this again has to do with the idea of system equilibrium. Another example is if you look at a pile of sand and you keep on sliding on top little grains of sand, there is a point in which the whole thing just collapses, but the incremental shock is no bigger than what it had been until the point of collapse. So again, there are various other parts of the natural sciences that might contribute to understand how a whole network of individuals and agents and companies, the whole system stays in equilibrium. But also, of course, there is the application of big data, of machine learning, semantics, and how those also help the risk management functions in operating. So there are some ideas, for example, on how your mobile phone can tell quite a lot about you as an individual, as about your character, and how that might affect the relationship you might have with the bank. So, for example, do you manage to charge your phone before the battery goes completely flat? In that case, maybe that's a sign that you will also be able to respond and repay your loan in time with the bank. Or how do you respond to text messages to your friends? Is it promptly? Is it in a nice, polite manner? Or does it tend to be clumsy? And again, some are saying that that could be an indication of how you interact also in more formal relationships, i.e. with the bank. So obviously, when we look at anything to do with access to your private information, there is an issue of privacy, particularly in Europe. In other geographies, other people are saying might not be as complicated. In Asia, for example, there is maybe less focus and less interest in privacy. So there is a wealth of alternatives and inspiration even that risk managers can tap into to help them in their function. And so let's see what happens, but hopefully this will continue to grow and give us tools that will be able to prevent future crises from happening.
Sounds very fascinating. I'm looking forward to reading the feature. And you can read Silvia's feature on thebanker.com.